Let's go to our reports tab. And let's go to our profit loss again. We're going to have to go 7/1/2022 to 7/31/2022 to look at our July transactions that we've categorized. We're going to see, oh, we have a negative net income. Starts with merchandise that we purchased at the cost of goods sold. And then we have our advertising expense and our small kitchen tools supplies and our insurance expense that we got set up. The first month, we were 1,946 negative in our profit, but that doesn't truly encompass all of the money we spent, right? So where is that rest of that money? So we go back to balance reports, we go to balance sheet, and we'll see that our cash balance is actually $8,803. So there is cash that's gone out, but now we can see there's equipment that we've purchased, which is from the loan money, and that loan money is down here. And then we have furniture that we've purchased, and we have signage that's purchased. Now, why this is on the balance sheet is different than why it goes on the expense, but the really short and quick way to think about it is the furniture is something that I don't plan to replace unless it really breaks, right? But let's say a milk jug that I'm steaming milk in, maybe I'd want to replace that every 6 months. Just, I like to have clean new designs or in terms of how the cup looks, or I have, a cleanliness thing, and I just like to, make sure I'm rotating them. So anything that I see, like signage, if I buy a sign, I'm not going to be swapping it out every 6 months. I'm going to leave that there until either it's worn out or I really think we need a new sign to bring in new business. But, the sign that I bought for now, at least for the foreseeable future, is going to be the sign. So that's where I think the difference between is it an asset or is it not an asset, and is it more of an expense? That's where that comes in. Again, you'll see contributions. Here in the retained earnings, you'll see a 1,946.30, and the reason that's in retained earnings is because we didn't switch our dates. We got 7/1/2022 to 7/31/2022. That will show up in net income because now we're in the current year. So that's kind of a good example of why 2024 is going to look different from 2022. Retained earnings is anything that's happening outside of the period, past periods, which means if I'm looking at January 1st, 2023, this net income, if that was all that happened in 2022, would be in retained earnings, and net income would be zero if no transactions have happened on the first. Again, I'm trying to just holistically tell you if you're taking notes, it might be good to physically write it out so that it'll connect to you later. But again, this is all to help you connect to stuff later. So the last thing we need to do in this whole list is reconcile our account, right? We've reached the end of July 31st in terms of all the transactions. Let's verify that everything is correct and done right, and then let's move on to the next month. What we're going to do is we're going to go to transactions. I'm going to go to reconcile. And the first time we do a reconciliation, you'll start to kind of understand what a rec is and how it works. So let's say get started. You can just click the X button here to kind of skip a lot of this stuff. So it's asking what account do you want to reconcile, and we really only have one bank account to reconcile, which is the Chase Bank. You can reconcile other accounts as well, but for now in this exercise, we're only going to be reconciling the bank account. There, you can reconcile credit card accounts, you can reconcile loan accounts, you can reconcile anything theoretically, as long as you have a list of transactions to get against it. But let's do this one so you kind of understand what I'm talking about. So obviously here it says beginning balance is zero, which we know because we opened a fresh bank account. So the beginning balance is zero. If it's not, send me a message on the community. Let's figure it out together if it's your specific example that you're looking at in your own day-to-day life. But for now, this beginning balance is zero, and it's asking for a statement ending balance. So let's go to our documents on the drive, and you'll see we have Chase Bank checking statements. Now, theoretically, you would have a separate PDF for every single month, but this is a kind of consolidated PDF. So you'll see this is the bank statement for 2022 July. So the opening balance is zero, which is correct here. And our closing balance is 8,803.70. So we're going to put 8,800. And I have a short-term memory, so I need to go back and look at what that number was. $3, $3.70. I'm gonna check that just one more time. Yep, okay. And our ending date is obviously going to be the end of the month, which is 7/31/2022. Now you got all this information in. Let's hit start reconciling. I'm going to hit don't show this message again, don't show this message again, because it's basically just showing you these things. You'll see when you first start everything, it'll say $0 difference, cleared, finish now, everything is checked because everything is correct. But if we uncheck this, this is kind of how it'll look, right? So the way that the reconcile is what's your ending balance and do all of the transactions that you have in your books match to your statement? So did you categorize everything is mainly what it's looking for. But let's say you're doing some more advanced stuff like journal entries or you have some other things and you've accidentally put something into the bank transactions. Catching mistakes is also a really good way, a really good result of doing a bank rec. So if we were to go through date by date and we were to say, okay, yes, the loan was deposited, yes, the contributions are made, go through and we select every transaction in July, you'll see that we have categorized everything and we have wholly encompassed the bank balance without any excess dollars or any, you know, not excess dollars. We're not missing anything. I'll go into the reconcile a little bit more in the next chapter where we go through and we figure out the next month how to kind of automate some of the stuff in the month and being able to. So once you know that you have a $0 difference and you have all the transactions selected, you'll essentially know you don't have any excess transactions or any transactions that you're missing because what you've categorized matches up to the bank balance. So we're going to hit finish now, and we're going to hit done. And that is our first month. Congratulations. You have done 1 month of bookkeeping so far. We have 11 more to go. So join me in chapter 4, and we'll get started on getting further and further into getting this set of books ready to go and ready to review for the full year worth of transactions.